Hey there, friends. Hey, I'm getting a lot of questions about what's going on with mortgage rates right now and the recent increases in rates. So I wanted to give a quick video to explain market conditions, what's going on, and whether or not it's still a good time to buy a house. And before I do that, though, I want to tell a quick story that illustrates what's exactly going on. So I want to start with a cell phone. Everyone's got one in their pocket, or maybe you're watching this on your cell phone. And I want to discuss a little bit about the cell phone. So right now, those cell phones are made out of what? Chips. Lots and lots of chips. And those chips are very hard to come by because they're all in China. And as we know, it's causing a lot of problems. For example, have you ever tried to buy a car lately? Oh my God, it's insane right now because of this chip shortage. People are not buying cars, or they are buying cars, but they're paying a heck of a lot more money. We're trying ourselves. It sucks. I'm going to tell you. But that inflation's just everywhere, right? Rents, home prices, food, gas, everything. Inflation is everywhere right now. And of course, it is causing a lot of problems as people struggle to pay their bills and those types of things. Well, part of the issue is that mortgages, the rate that you pay on a mortgage, it doesn't come from a bank vault. People think, oh, there's a vault of cash somewhere. And you don't really realize where that money comes from. So that money does not come from the Fed, unlike what some people want you to believe. That money actually comes from what's called mortgage-backed securities. And that is money where the mortgages are bundled up together and investors actually invest in those mortgages to get a safe rate of return. And currently those are around 4%. And then, the mortgage companies put their profit margin on that, puts that in the 5's. And so that's kind of how that works. And so each company has a little bit different profit margin, which is why there's different rates with different companies. Kind of like gas. Gas is a pretty good, example. It's very similar to mortgages in terms of the way they're priced. And so because of that, these bondholders are getting around 4% interest on the open market right now. But inflation's what do we know? It's 6, 7, 8%. And that's a problem. That's a big freaking problem because the bondholders are losing money. You don't want to lose money, do you? Of course not. So what are they doing? They're asking for more money. And they're doing that between the buying and selling of the bonds and through supply and demand, basically demanding that the bonds pay more money in order for them to actually get a profit. So also part of this is expected inflation. So the reason it's had a really high run up lately is, we thought inflation was coming down, and then that war in Ukraine happened. And now we're like, well, wait a minute, this inflation might be here for a while until the rates are going up and up and up. So now you may be thinking, well, oh my gosh. And the reason I tell you the story is because, we're at a decision point now. Where is it still a good idea to buy a house? Is it still affordable to buy a house? Is the market going to suddenly crash? And these are all legitimate questions because the buying power has eroded because of increased rates and because of the fact that house inflation has happened. But here's where it gets really interesting. They talk a lot about affordability, but I'm going through some real stats here, some actual numbers and actual data that Barry Habib, one people I follow, has shared with us. Well, last year in 2021, the average person buying a home spent about 20% of their pre-tax earnings on a mortgage, which is a very, very healthy rate. Right now in 2022, we're at 25%, which is also actually still very healthy, which means that technically, while things have gone up, they haven't gone up as much as people realize. So the fact that people say that, oh my God, I raised price out of the market, that's not quite true. Not even close. We're not close to 2006, 2008 levels. We don't have the craziness of these mortgages fueling the market. The other item is that we don't have the speculative home purchases. In 08, people were just buying houses that they had no intention of living in. So it was a bubble waiting to burst. We don't have that right now. We have a massive housing shortage. Massive freaking housing shortage. And it's not getting any better, by the way, because these builders aren't building enough houses. And there's a lot of millennials looking to buy a house. So we're going to have this whole demographic discussion about why that's happening. Next, rents are going up. So say you don't buy a house. Well, your rent's still probably going up next year. And people know that, so they're still coming in the market, pushing up home prices. So now you've got a choice. Do you want to at least lock in your payment and most likely get some money next year, build that equity in your home next year? And by the way, rates are still a very historically good levels. 5% is still a very good level. In the past, rates have been 8, 9, 10%. We've just been spoiled the past few years. Next, let's figure what if rates did go to 15, 16%? I know that would be shocking for everyone, be a lot of pissed off people. But what if they did? What if they went to 15% like the 80s? Did you know the 1980s actually had the highest rates of appreciation in the history of our country? Why is that, by the way? Well, a few reasons. One, when someone lives in their house and they're at a lower rate and the rates have gone up that much, they're kind of reluctant to sell, which cramps inventory even more. That's one problem. The second problem is typically when rates go up that high, the stock market kind of goes down. And so people are looking for a safe place to put money, and real estate is considered a safer investment, one of the safest investments overall. So what are some trends that are going to be happening here? I personally think that here in Ohio, where we have lower values, that we are going to see some people looking at, well, maybe I should move to a more affordable market. I mentioned affordability. That 25% index is nationwide. There are parts of the country, of course, where it's not 25%. It might be much higher. And those people are going to be looking to move very, very soon because they're looking around and going, well, do I really want to pay $3,000 or $4,000 or $5,000 a month in rent? We're not going to be moving to Ohio or Kentucky or Indiana or somewhere in the Midwest that's a lot more affordable. So if you're a realtor watching this, think about that. How can you get people from out of state to come to our area? So is real estate still a good investment? Absolutely. If you are on the fence about buying a house, I'd say keep the faith up and get your finances in order, save your money, and let's talk. Let's see what you qualify for. Get you rolling. Anyway, those are my thoughts on the market. As always, if you have any questions, feel free to give me a call, 937-572-3713 or scarpero.com. Later.